Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson, we continued our discussion on the logistics of Forex trading with a look at rollover. In today's lesson, we're going to continue our discussion on rollover with a look at where we can go to find out whether we will pay or receive money for holding a position overnight and how much that will be. So let's get started.
Another nice feature of the platform we're using here is that it is very transparent in the way that rollover is done. As this is one of the more complicated things about trading Forex, some firms will take advantage of traders' lack of understanding and charge them more than they should when the trader is long the currency with the lower interest rate, and pay them less than they should when the trader is long the currency with the higher interest rate. To see what I'm talking about, let's log into our free real-time demo trading accounts. If you've not done so already, I encourage you to pause this video now and click the link above this video if you're watching on InformedTrades.com, or to the right of this video if you're watching on YouTube, and register for a free real-time demo so you can follow along as well. Once you're logged into the platform, change the dealing rates window from advanced to simple by clicking the Simple Dealing Rates tab in the upper right-hand corner of the dealing rates window. Once you do this, scroll over to the right and you should see a column that says Roll S and Roll B. Roll S stands for the roll amount that you will either pay or receive if you sell to enter the trade, and Roll B stands for the roll amount that you will either pay or receive if you buy to enter the trade. If the number beside the currency pair and under the appropriate roll column has a positive number, then this is the amount in US dollars that will be credited to your account per contract for any position held past 5 p.m. New York time. If the number is negative, then this is the amount that will be debited from your account per contract for any position held past 5 p.m. New York time. Remember, if you open and close a position before 5 p.m. New York time, then the position does not need to be rolled over, so your account will not be debited or credited. As a quick example, let's say I want to know the amount of interest that I will either pay or receive if I buy 2 contracts of pound yen and hold that position past 5 p.m. New York time. To find this out, I would simply scroll down, find pound yen in the dealing rates window, and once I've done that, I would scroll over to the Roll S and Roll B column, and in this case, since I'm buying, I would look in the Roll B column where I would see that for holding this position past 5 p.m. New York time, I would earn $50 per contract. In this case, since I'm trading 2 contracts, I would earn $100 for holding that position past 5 p.m. New York time. Once this trade is opened and held past 5 p.m. New York time, the interest credit will show up in the roll column of the open positions window. One last thing that is important to understand about the logistics of rollover is that trades held past 5 p.m. New York time on Wednesday take into account the weekend interest when the market is closed, so the rollover amounts are going to be triple on that day. Also, if there is a banking holiday in one of the countries whose currency you are trading, then this will affect the roll amounts as well. The important thing to understand, however, is that all you need to do to know how much you will either pay or receive for holding a position past 5 p.m. New York time is look in the Roll S and Roll B columns of the platform. As you can probably tell from this lesson, because interest rates cause currency traders to either earn or pay money for holding positions, they have a dramatic effect on the value of currencies, something which we will talk more about in our next module. For those of you who have heard of the carry trade, this comes from the concept we have learned about here today, where traders buy currencies with high interest rates and sell currencies with low interest rates to earn the interest rate differential, or otherwise referred to as the carry. For your homework assignment tonight, I encourage you to place a few trades in different currency pairs and hold them past 5 p.m. New York time so you can see how the rolls work. As you do this, think about the power of leverage and what you could potentially do using some of that leverage available to you to try and bolster the returns from the rolls if you are long the currency pair with the higher interest rate. That's our lesson for today. In tomorrow's lesson, we'll have a look at the free real-time charts that are available to us on the platform and some of the neat features there. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.